our company's dealing with families and businesses in all the devastated areas in Los Angeles right now, and we're seeing different carriers respond in different ways. We're seeing a lot of testing happening where they're bringing up environmental consultants that are doing testing, and there isn't even really a lot of agreements amongst the experts and reviewing the laboratory results for asbestos and lead contaminants and what the protocol should be. So you've really got a lot of opinions as to how things should be remediated or how they shouldn't. Early on, you had California Fair Plan suggest that if you didn't have physical damage, burned area of your home, that you weren't covered for any smoke that was in your home. As you probably have heard, there's been some lawsuits trying to flush that out. And recently we've seen California Fair Plan come around with some protocols and some agreements to do some cleaning. Whether the protocols are going far enough to properly address the concerns of homeowners, especially homeowners that have asthma in their family or have other health conditions in their family.
Welcome to the All Things Wildfire podcast, where we delve into the latest trends and hot topics in protecting properties against wildfire. So sit back, relax, and join us as we arm you against disaster.
Steve, welcome back. Here we are again on another podcast. And, we were on one sometime last year. And now fast forward to today, here we are in close to May, right?
May 1st.
May 1st. And what let's talk about the Palisades Fire, Altadena, and like you mentioned earlier, Malibu's also impacted in this Palisades area. Homeowners are dealing with the January 7th event that triggered ignition, caused wildfires throughout all these areas that lasted a greater part of a week. And now some homeowners have already been back in their homes. They've got everything cleaned up. Some of them are still waiting around to see what the carrier is going to do. Others have lost their homes completely. And as a public adjuster, you guys are boots on the ground. I want to know what's going on there. I want the listeners to kind of hear what different things are taking place, because this is still a very fluid situation. It's not your typical fire. You go out there, you handle it, everything's done. It seems like every week something new is taking place, and I'll just let you jump in and start to share some of the details on that.
Yeah, well, thanks for having me again, OP. Nice to be here with you.
Yeah,
Sorry it's under these conditions.
Yeah.
But we're dealing with, our company's dealing with families and businesses in all the devastated areas in Los Angeles right now. And we're seeing different carriers respond in different ways. We're seeing a lot of testing happening where they're bringing up environmental consultants that are doing testing, and there isn't even really a lot of agreements amongst the experts and reviewing the laboratory results for asbestos and lead contaminants and what the protocol should be. So you've really got a lot of opinions as to how things should be remediated or how they shouldn't. Early on, you had California Fair Plan suggest that if you didn't have physical damage, burned area of your home, that you weren't covered for any smoke that was in your home. As you probably have heard, there's been some lawsuits trying to flush that out. And recently we've seen California Fair Plan come around with some protocols and some agreements to do some cleaning. Whether the protocols are going far enough to properly address the concerns of homeowners, especially homeowners that have asthma in their family or have other health conditions in their family. Those are the people that are the most sensitive to these contaminants that find themselves, these particles, as you know, they get in, have all the windows that can be closed, the doors can be closed during the event, and still you'll find these contaminants. And we have a lot of clients where you go into the house and there's obviously smoke, but you look around the doors, you can literally see the soot that has pushed its way through. I'm sure you've seen that too. And so, how do you address these and how do you put protocols? We have IH testing and protocols set that say you should tear everything out of the house, all the drywall, all the insulation, down to studs, throw away all the couches, throw away everything. And then you have, other protocols, especially through the insurance carriers, where they're coming in saying, no, we can wipe it down, we can clean it, and you'll be okay. And so we're seeing various different ways that people are looking at it. So it becomes complicated.
Yeah. It's so incredible, man. Um, initially, everyone whose home survived around those areas, a lot of people were getting things deodorized in their home, wiping down, cleaning all these areas like you would a typical smoke loss. But now with these contaminants, here we are months later, and testing results are coming back with lead, sometimes asbestos. And so now it's a whole nother ballgame, right? And so going back to the IHs, the industrial hygienists, it's really interesting how, like you described, you have one scenario where they're saying strip the drywall down to the studs, which seems kind of extreme to me, right, as a contractor. But on the other hand, you have other hygienists that are saying, hey, no big deal, just HEPA vacuum the soft goods, which I
Right.
think is like way like, I think that's detrimental also. There's got to be this balance somewhere. So how do you help bridge the gap between two experts that are disagreeing on the approach?
For us, so we're consumer advocates. So we get hired by the policyholder to look out for their best interest. And that means that we need to listen to what our clients want and need also. We have some clients where we might believe that they might be entitled to more rigorous, a larger scope of work, but they may come to us and say, hey, Steve, team, we're not worried about this stuff. We want to make sure it's clean as we can. We don't want to spend 2 years fighting with the insurance company. We want to get back in our home. So we have to listen to our clients. We have other clients who have, health concerns, or their immune systems are deteriorated. And we have elderly people who we're representing who might never move back into that home just because of circumstance. So insurance companies paying them to live somewhere else during this interim time, but they're not going to move back in. And so you have a lot of different clients with different kinds of needs. So for us, it's advocating for the specific client and what's going to be best for them and for their family, and for them to know what the potential risks are. And, there's potential risks both ways, Opie. There's a potential risk of having to fight for 2 years, and with insurance companies that might dig their heels in and get more experts to prove that their experts were right, and we can get more experts to prove that they're not, and we can get to some compromise. But some of these things are going to take a lot of time, so it depends on what people want and need for their particular situation. Because there's no silver bullet to say this is exactly how it needs to be done, because you have expert opinions, but that's what they are. They're opinions. They're expert opinions, but what we're seeing in this wildfire OP is even more than normal about such a huge disparity between experts and what they think.
Wow. And so, well said, Steve. Honestly, I think that everything that you do, anyone that is providing the service, really is having to deal with the customer, the client, and what their needs are, and meet them where they are. But it sounds like if people are going to want to battle, I guess I don't know if that's the right term, with the insurance carrier, patience is required. And so if you're going to tell someone, or someone understands, okay, I need to be patient in this process, it's going to take a while. What happens with a policy when you have additional living expenses that either have a cap of dollar amount or there's a cap of time? And if you could talk a little bit about the living expenses and what that looks like, and then secondarily, when someone is engaged and says, "Okay, we're going to be patient," but they could run out of that. How does that work with the insurance companies?
Yeah, that's a great question. First of all, in a wildfire, per the guidelines that are set forth by the Department of Insurance, people have up to 2 years, 24 months in their policy or their dollar limit, and that can be extended twice, up to 36 months in a wildfire, up to the dollar limit. However, you still have to get agreements from the insurance company that that's the amount of time. So those are the maximum. It doesn't mean you automatically are granted 24 to 36 months worth of time, even if you have no dollar limit. So you have to get the insurance company on the wagon that, hey, while we're investigating this claim, while we're disagreeing on what protocols should be in place, we need to, Mr. Insurance Company, we need to agree that we're not going to make these people homeless while we talk about what should or shouldn't be done to their home. And on that note, we've had pretty good success with the carriers about keeping people in alternate housing while we work out what these protocols are. But you're right, at some point you reach, so not only do you have to agree on what the protocols are, but then you have to perform the work, whatever that work is, which is going to take time, as you
Right.
know, as well. So you do have to be thinking about and cognizant about how much are they spending each month. And, you know, it's easy to do the quick math. When will that run out if they have a dollar limit? And at the 24 months, as long as you get the insurance company to agree that you're still discussing what needs to be done and then setting the time for it to be done. But then to agree to approve the next 12 months, the next 6 months, and the next 6 months, you've got to really get the insurance company on board with that too. So yeah, and I think we'll get through a lot of these in a lot faster time frame than that. And obviously, total losses are a different conversation.
Right.
But there's a lot of people that have physical damage. The side of their buildings burned up a little bit, and there's more that creates more smoke, soot, and contaminants in the building than if you're just, you know, across the street or next door to buildings that have burned down. So you have really a wide, varying degree of what is damage.
Yeah.
So we have clients in, you know, every bucket of that damage, and so that's what makes this unique, OP, because you can't just say, well, my client down the street in Altadena was paid and at State Farm, and you guys paid him this way, so you need to pay this client this way, which is something that we use a lot to be able to say, hey, you need to give the same benefits to one policyholder that you give to another. But there's such a varying degree of damage and contaminants and neighborhoods and how close you are to something and did the side of your wall burn or not burn. So it's harder to point to another policyholder from the same insurance company and say, you have to do the same thing for them that you did for these people. There's too many variables here.
Yeah. Yeah. Got it. Now let's talk about the homeowner that has already done the cleaning. They're either already moved in or getting prepared to move back into their home. The duct systems have been cleaned. The home has been cleaned inside and out, HEPA vacuum, deodorized. There's no sign of any odor. Everything's good. They're going to move back in, but across the street, there's rubble of just properties on the ground, and sometimes even the neighbors next to them. The carriers have already paid to get this cleaned up. And what I've been hearing from homeowners is they're asking me, like, hey, OP, like, my neighbors haven't started demo yet. They're going to start demo in the next few months. What happens when all this debris goes up in the air? Does the carrier going to come in here and pay again? And I'm like, look, you know, typically not from my experience, but don't know. And so what is your thought? What have you seen happen, and maybe even in past fires and,
Sure.
and maybe what's happening now?
Well, we have definitely seen where people get cleaned up, they get back in their homes, and then, you know, all this construction starts happening, start pushing up all this contaminants once again. It's in the air, the particles are floating around, and people see that they've got not dust in their home, but really contaminants and smoke and things have resettled in their home. And the insurance companies do not like to pay twice for the same thing, as you know. They don't want to clean and then clean again. So it's really imperative that these homeowners, before they even let you or somebody into their home to do all this cleaning, that they get some agreements with their insurance company in writing ahead of time that says, we're going to save you, the insurance company, money by getting back in here quickly. However, recognizing that this might stir up a whole new cycle of issues in our home. And we're willing to take that chance when we're back in our home, but we need an agreement with you, Mr. Insurance Company, that you will pay for us to move out again and house us again. Well, people can come in, competent people can come in and restore our home once again. And it saves you, the insurance company, money by us not waiting around for that to happen and then doing a perfect clean the first time. And it gets us back in our home faster. But recognize that we're putting a placeholder in this claim that says, and in writing, which is really important, OP,
Right.
that says that if we need to move out of the house and have it re-cleaned again, that you'll pay for the costs associated with cleaning and moving and staying somewhere while it happens. And if you don't have that in writing, you're asking for a problem later.
Mm, mm. Wow, good to know. A lot of people have been asking the question, and it's a legitimate concern when you see the neighborhood is, every other house is down. There's going to be demo. There's going to be a ton of construction going on around those areas. Steve, let me ask you another question with regards to ALE, additional living expenses. What I was seeing, and maybe you've already seen this too, obviously, initially homeowners are dispersed. They're looking for leases. Leases are a year minimum lease. And they're like, hey, the carrier comes in and says, hey, this is going to take 6 months, 4 to 6 months. We should get you cleaned up and back ready to go. But the homeowner has no choice but to sign a 1-year lease. What happens with the delta there? Is that difference owed by the homeowner? If the carrier says, hey, you can get back in your home in 6 months, you had to sign a year lease. What happens with that money?
Well, that's all part of the negotiation, OP. And the key to this is to bring the insurance company in early and get them to agree with you early, so that we say, well, it may only take 6 months, although we don't know it's going to take 6 months. It could take a lot more. And here are the options. We can get them in a 6-month situation, and it's going to cost X plus X. We can get into a 12-month situation here, and it makes more sense because of travel time, close to schools, whatever. And but you do a mathematical equation to show them that it makes sense to do it financially, even if they're paying for 4 months or 5 months of a rental that nobody's living in. You want to paint a picture. You want to help the insurance company understand why it makes sense to do that, or why there's no alternatives to do it. The other alternative might be a bank of hotel rooms, and now you're paying for people to eat out every day. You're paying for 3 rooms in a hotel. You're paying for peaks and valleys of pricing. And that's a lot more money when you start adding that up than putting somebody in a place that they might not use the full lease. But definitely you want to bring them on board, and you want to get everything agreed in writing. Every time you have a conversation about your loss of use or your additional living expense, and your adjuster says, yeah, that makes sense, you should do that, you got to send an email confirming the conversation, because that adjuster might not be the adjuster 3 months from now. As you know, as you've seen historically in wildfires, they cycle in and they cycle out. There's been some legislation to try to control that a little bit, but it's still happening, and it's still going to continue to happen. And so it's only as good as your documentation. But the idea is bring them in early, help them understand what you're doing, why you're doing it, explain to them how it financially makes sense to them, or there is no other opportunity to do something other than that. But the worst thing I've seen people do is just make decisions and go forward and have some loose conversation with somebody at the insurance company or their agent or broker, which is not going to help them because they have no ability. They don't have the power of any decision making in the claim. And so I said, well, my broker said I could do it and it'd work out. The broker's not going to they're not going to be the ones approving these
Right.
transactions. And that's who people have the relationships with. They have the relationships with their agent. They go golfing on Sundays with them or whatever. They go to church with them or whatever. And so, the agents and brokers are in a tough spot because, they want to help their clients as best they can, but they don't have they're kind of handcuffed. They don't have the ability to get in there. And candidly, that's why insurance companies separate the sales people from the claims people, right?
Right. Yeah. Agents are not working the claim. So,
Right.
wow. Okay. Good stuff. Now, with regards to total losses, the house is completely burned down. What challenges, difficulties have you seen there? Are you dealing much with those clients at this point?
Oh yeah, we're dealing with a lot of them.
Okay.
Probably the majority of the claims we're handling are total loss.
Okay.
We're handling the others as well, but predominantly total losses. And the challenges change from carrier to carrier. Some carriers have been a little easier to get along with than others. I don't want to call anybody out on this podcast, but you're dealing with price surge. As you know, we've talked about surge pricing before. It's definitely happening in both Altadena and Palisades and Malibu. And you're talking about, you're talking about neighborhoods that are destroyed, and the infrastructure is destroyed too. Schools are destroyed, the restaurants and shopping is destroyed. So, when you talk about getting back in there and trying to be the first one to get rebuilt back, you can get rebuilt back there. I mean, we're still dealing with Lahaina in Hawaii, that almost nothing's happened in Lahaina.
Wow.
And same thing, they lost all their infrastructure. And this is even bigger in terms of size than Lahaina was. And so when you're talking about search pricing and you're talking about all these things, you don't even know when you're going to be ready to build. So it's all real theoretical as to what the pricing's really going to shake out to be, and who's going to go back and who's not going to go back. Some people in the Palisades have already sold their lots and moved on. So what pricing really is going to look like is nobody knows for sure, because nobody's building yet. Very few people, I doubt, have signed contracts to build anything right now. And then, when you talk about quality, you've got a lot of those homes up there that were built older and they've had remodels and additions put onto them. And there's varying levels of quality and design, and being able to account for the level of quality and the standards in these homes is going to be challenging. The insurance companies want to sort of blanket what pricing is and look at square footage pricing. And, that's not the right way to do it. To just throw out square footage. Everybody loves to talk about square footage pricing, but really, in order to do this right, you've got to take this particular home that's right here, and you've got to do an investigation as to the fit and finish and the quality of the materials and what they had, and develop, you can go backwards and figure out what the square foot price was, but that's not really the right way to do it. So there's challenges with the insurance companies of wanting to just do a Marshall and Swift, which is a quick pricing guide that's nowhere close. You do still have the same problem we've had before. We've talked about this before, OP, where you have out-of-state adjusters coming in, emergency adjusters coming in, and they have absolutely no concept of what things cost in Pacific Palisades or even Altadena. And so they have unrealistic expectations of what could be done. So, and a lot of these people are coming in. It's not like the old days where insurance companies really did a lot of training with their adjusting. That really is not the way it's done anymore. So you've got a lot of people. And then if you want to talk about California Fair Plan, as you know, and everybody's talked about this, they were never designed to be an insurance carrier the way they have become just by default with opportunities in California, people pulling out of the marketplace. Yeah. So you had this California Fair Plan. It's been around for a long time. They had this much of the market, and now, in the last 2-3 years, now they have this much, but their employee count has only gone up this much.
Yeah.
So they have this many claims before, and they have this many claims now, and their employee count's gone up by this. So the employee count hasn't kept up with the claim cycle by any stretch of the imagination. And I think that Victoria Roach and I think her team are trying to do everything they can. I don't point at them and say they're bad people, but they're in almost an unwinnable position when you just can't grow the employees. And if you need that much growth in employee count, how do you train them? Especially in the middle of a major event. And so that puts them in a really difficult spot to try to do the best they can. And I've met her several times and talked to her, and I think she really does want to do the best she can. But she's just given a game plan that's unwinnable, right?
Yeah.
So,
we've dealt with it. That explains why it takes so long to get a response. I've got a couple of customers that had California Fair Plan, and they just don't get it. They don't understand. They're pulling their hair out. And the Fair Plan wasn't built for that. And it wasn't built fast enough when this response happened. And so it's going to take time. It's going to take time for sure.
Yeah.
Now, with regards to, I just want to mention to listeners to be able to share this with other people. It's likely that if you live in California, Colorado, New Mexico, or any Montana, any place where there have been historically some fires, and now Israel's on fire right now. That's incredible, right? So it's going to be prudent to do a digital scan of your property.
Hmm.
interior, because you were
Yeah,
talking about like, the carriers want to come in and just give you a square foot price. But, when the client has spent X amount of dollars for certain finishes of, cabinetry or wall finishes or bathrooms, kitchens, the numbers just go higher and higher. And you can't just put a one blanket statement to say,
that's
this is how
right.
much I'm going to give you. So doing a digital scan is so crucial. I had one client of mine, we did a digital scan a year ago. We did a drone of his property, gave them access and said, "Here you go." And it was just one of those steps to give them as a precautionary measure. And we did some other work around their property. And sure enough, his house went down, and he called me up. He says, "Hey, OP, I need that code again to get access." He sent it to the carrier, and now they're able to see the entire home as it was before it burned.
It helps so much.
Helps so much. So I think that's crucial in the planning that we all do, so that way we can be prepared as well if something were to take place like that.
One step further onto that digital scan, also a good idea, and it gets a little invasive. It might be something homeowners want to do just with their iPhone for this part of the scan, but walking through the home and talking about the stuff in the home, the contents,
Mm,
opening drawers with a video, and opening closets. And if you saw the inside of my wife's closet, you'd really want to make sure it was documented with video, because the bags and the shoes and all this stuff, right? There's a lot of value there. I don't know if it's value, but there's a lot of money there. And so doing that, every 6 months or once a year, you'll walk through the home in 15 or 20 minutes and put it in the cloud, or have the service like yours that will help do it. But don't just capture all the fit and finish of the home, but get a quick video scan of all the stuff in the home, and that changes every year. But that's really valuable. When we have somebody who's done that, it makes a big difference in documenting their inventory.
such a great point. There's one customer from the Woolsey fire. She met up with me and said, "AOP, I lost my entire home. The carrier's asking me to do an inventory of everything that I had in the home. All my photos were in the home. I had nothing really that I can point to digitally." And so she had a notepad next to her as she sleeps, wakes up, and
Yeah,
that was right. That's her diary of like, here's
yeah,
what I remember. And what you don't remember, you don't get paid for, right? And
that's right.
so, yeah, it's tragic. Um,
That's why, it's not always just about picking on insurance companies. We're consumer advocates, but, you make a great point. Sometimes it's not that the insurance company isn't giving you everything, but if you're not asking for it, or you don't know how to ask for it, or you're not thinking of something, there's no responsibility or duty for them to say, "I don't see a mop on your inventory. Didn't you have a mop?" That's not their function. It's not their job. So,
yeah, yeah,
yeah.
interesting. Um, So, you're right. When you talk about price surge, prices are going to be going up even more, especially when construction actually starts. I was speaking to one gentleman who uh, constructed a pool. He was doing the cleaning, and we were talking about what he's going to be doing. I said, "Hey, are you going to be in the Palisades much longer?" He says, "Hey, OP, I'm out. Like I'm only dealing with my clients, but I am not interested in doing any work at all." Because you could uh, imagine one street, and you're going to try and find parking for your construction vehicles.
Yeah.
It says there's going to be no parking at all, because whoever gets there first is going to get the parking stall or on the sidewalk. And you've got hundreds of these homes. And so now when I thought about it, like, you know what? He's going to have to unload his equipment and his people, drop everything off, and go find somewhere to park, and then walk back, Uber back. I don't know, right? It's just incredible when you start to think about the logistics, and it's not as easy as we thought. In addition,
And it's not like you're building it's not like a developer building attractive homes. That's organized, and everything's being done all the framing's being done, and then
right?
all the rough plumbing's being done at the same time. But this is thousands of different people making different decisions at different stages and times, all in a very concentrated area. And yeah, it's gonna be messy,
It's going to be messy.
and it's gonna take a long time. And sometimes people say, oh, I'm so lucky. My house was the only house standing on the block and I'm really lucky. And yes, they're really lucky, but they're going to live through, 5 years of this chaos and dust and noise and no parking on the street and all that kind of stuff, only to be rewarded 5 or 7 years from now with the oldest home that's not new and fresh on the block.
Man.
So it's lucky,
Yeah.
but it's not lucky.
Yes, I get it. And look, the people that are going to be rebuilding, they have to be thinking about that, because just because you rebuild and you're in your home in 2.5 years, great for you, but that's not the norm. And you're going to be living in the construction zone for the remainder of 3 to 5 years after. And that's just the reality. And so when you really think about those things, the question is, do I really want to be a part of that?
Right.
Do I really want to be part of it? So I can see why people are selling. On the other hand, you mentioned the elderly. There's one of my clients has some parents, they lost their home and they're in their 80s and they're like, I'm not rebuilding.
Not enough ramp up time. It doesn't,
No.
those years become really valuable, right? There's only so many of them left.
Absolutely. And so when you think about, like, there's so many different scenarios going on, playing out right in front of us, whether it's in Altadena or Palisades or Pasadena or Malibu, it's happening everywhere. Everyone's life is being impacted in a very unique way, and decisions are being made from their standpoint of their experience, their family, their time frame, whatever it is, right? Their children who don't have a school anymore. Like, so much is going on. So yeah, there's a lot happening there.
And on that note, OP, I know you got another question, but on that note, there also that the latest legislation, people have the opportunity to go and buy another home somewhere else and qualify for their insurance replacement proceeds. And it used to be, up until recently, it used to be that when you did that, so using fake numbers, if you had $1 million replacement cost claim on your home and you went out and spent $1 million on another house somewhere else because you didn't want to go through all the cycle of time and dealing with all that. So you find another home, you spend $1 million. Before recently, just in this wildfire, I think it's the first wildfire that qualifies for this new legislation. Before, you'd have to take the value of the land out of the purchase. So you got $1 million replacement cost. You go and you buy a home for $1 million. Insurance company comes in and says, "Well, the land was worth $300,000, so we're only paying up to $700,000." And you still own your lot where the fire was, but now with this new legislation, the insurance company is not allowed to take a credit for the value of the land at the new location. So if you pay $1 million for the property, it doesn't matter how much of it's land, you still qualify that you spend $1 million for replacement cost. So there's some additional benefits there for people that and you still own your land where the fire was, and so you can buy a place even if part of what you're buying is land. It doesn't get taken out of the equation from your insurance claim. So there's some real opportunity there.
That's very valuable for people to know. Yeah. Okay. Interesting, because I would imagine people are now going back to what you said though. Is that only when they have replacement cost policies, right? Because
most people, 95% of people in this wildfire have replacement cost policies.
Okay, fantastic. And so they have the possibility to take that $1 million instead of rebuilding, saying, "Hey, Mr. Insurance Carrier, I'm going to just buy another property over in this area for that amount of value or more, and I pay the difference." But and then what will happen? They'll just buy that property for them, or they'll move that money over there?
No, you go into escrow, and depending on the carrier how it works, but basically, and you can still get a loan on the new property if you want. You don't have to pay cash for it. But whatever your family circumstances are, how you want to do it. And the only thing the insurance company might get involved is like if you had a 5-bedroom home and you buy a 1-bedroom home because it's sitting overlooking ocean and you're basically buying land. I imagine we haven't seen that scenario because this is new.
Yeah.
But I would imagine the insurance companies would push back and go, no, you're supposed to buy something similar to what you had. So if you had a 5-bedroom home and you go and buy a 1-bedroom shack and you bought a big piece of land, I imagine you'll see pushback on that.
Got it.
But if you had a 3 or 4 or 5-bedroom home and you buy a 3 or 4 or 5-bedroom home or somewhere close to that, I think it'll be I think that'll be a transaction that'll happen pretty easily. And the way it's worked mostly in the past is you've got a escrow agreement. The insurance company sees you're committed to buying the property, and they'll fund into escrow. Or some people just do the deal, get a loan, and then the insurance company will pay them.
Got it. Valuable. Love that.
Yeah.
Steve, what about insurance limits? Have you seen people hit their limit? Outside of the FAIR plan, I think we understand it's $3 million is the cap, right? Is that still the case?
Yeah.
Okay. And but outside of the FAIR plan, have you seen people exceed their limits at this point?
Oh yeah, yeah. So my team spends, all day on the phones with inbound people calling to see if we can help them, and we turn away more people than we can help, and that's because of the inadequate insurance policies. And there's still a lot of people we're helping, but we've seen a lot of underinsurance. But the funny thing about underinsurance, OP, is that, people can look at it and go, well, yeah, it's going to cost me 1,500 foot to build, and I've only got 1,000 foot to build, and so I'm underinsured. But the insurance companies don't see it that way. So you can believe you're underinsured, but you've got to be so woefully underinsured that the insurance company believes it too. And in those cases, we can't help anybody other than within the confines of the insurance policy they bought. Unless something went wrong or it wasn't written the way it was supposed to, getting rid of those things. But
Right.
generally speaking, if you've got $100,000 on your building, and even if you have a 50% extended replacement cost, and you have $150,000 on your building, and it's going to cost you $500,000, I'm using easy numbers, and it's going to cost you $500,000, you're probably going to get the 150 or get committed to the 150, the 100 plus the 50, because you've got to show that you're replacing. So yeah, we've seen a lot of that. We've seen more of it than we've seen in the past, and I imagine the future that'll continue. Unfortunately, some people are just woefully inadequately insured, and then there's a lot of people that are insured kind of right there. It's not obvious that they're just going to get the money, but they're probably going to get the money, but they're going to have to work to get it. And we're helping a lot of those people. And then there's people that have good insurance still, believe it or not. They're still out there.
Yeah. And I wonder why do you think, if whatever percentage is underinsured, why do you think that is? Is it just like the agent or the broker or the underwriting wasn't, they weren't up to par? What are your thoughts there?
Yeah, I think that the systems that they've used to figure out pricing for insurance policies has not been realistic for a long time, not just in the last year or two, for a long time. And we've seen underinsurance recommended numbers by insurance companies for many, many years that are not reality. And part of it's where we live. They say that they've got neighborhood codes and things, but where we are, where these fires are, and the Palisades and Altadena and Malibu and really California, it just costs more, and they haven't really taken in surge into account. You've got some agents that are so price sensitive when they're selling insurance. It's a little different market now. Now anybody will pay anything they can just to get insurance. But not too long ago, when these people were buying insurance, there are agents that were, when people buy insurance and they're not listening to All Things Wildfire podcasts, and they're not educated, they're not thinking, it's kind of like, I have to buy this because I have a loan on my house and they're making me buy insurance. Yeah. So I want to buy the cheapest insurance I can because they're not seeing the value of what product they're buying until they need it, right?
It's interesting. And I'm trying to press mute every time I'm coughing here because I'm trying to fight this cold. But what's interesting is I have a carrier, and the carrier renewed my policy. But when I was talking to the agent, I was going through this form, and we were live. She was filling it out for me as we're talking, and she says, "Okay, I came up with this price." I said, "Hey, you know what? I'm in the business, and I can tell you, like, I'm not going to do the construction of my own house, so I'm not going to pretend to say, hey, I can do it for cheaper. On the contrary, I think it's going to cost more than that. So can we raise it? Like, I'm willing to pay more money, right? That's what it was
Right.
coming down to. And she's like, no, OP, sorry, the system doesn't allow me. I'm like, what are you talking
I've heard
about?
that so many times where people want to buy more and they can't. They're even willing to
Yeah,
pay more and they can't. And then a lot of agents say, well, don't worry because you have extended replacement cost. But you shouldn't be figuring out how much coverage to have on your house and using that, whether it's 20% or 50% or whatever it is. You shouldn't be using that extended replacement cost when you're trying to figure out how much you think it'll cost to fix your house. It's built to be an can I say shit on this show? I don't know if I can.
yeah, of
It's
course
built
you can.
to it's built to be like an oh shit moment. Like I thought I was covered at 100%, and now this price surge is happening, or this lumber shortage because of some crazy beetle ate all the wood, and now wood costs
Right,
more,
right.
something like that. It's supposed to be this extra bucket of coverage that you don't count on or don't need, so that it actually helps you if there's some situation nobody could have expected. But what a lot of agents have been doing is they've been saying, okay, well, you got $100,000 with insurance, but don't worry because you got a 50% extension. So you really have 150. So we'll just make sure to cover for the 150. And it's not, and they're not using the coverage the way it was designed to be utilized. And that's part of the problem. And part of the problem is then the programs say they can't add coverage, to your point, when in your example.
Right.
And then part of it is they're trying to be, I'm a State Farm agent and I'm competing against an Allstate agent. And I know the only way to make my rate cheaper than the Allstate agent is to lower the coverage so that the price is lower. And if the client doesn't think it's something they're ever going to need, they don't notice whether they've got 50,000 less coverage on their building. They just notice it's $200 a year cheaper. So it's
Right.
all a combination of all these things, OP, that
Yes.
have gotten us to where we are. And it didn't happen overnight. Some of these policies are policies that have been renewed and renewed and renewed and renewed, and people don't pay a lot of attention to the renewals. Maybe there's a little inflation guard protection. It brings it up a couple dollars a year. But it's not keeping up with the real world.
Yeah. Now, Steve, this is your business. Like, you're in the industry. You live and breathe insurance, but for the typical homeowner, um, what do you suggest? I mean, an annual review 2 months before policy is, the policy renewal date is coming up. What type of things are you looking for? Should the homeowner be looking for in the policies?
Well, you're right. A couple of months before the policy is going to renew, you should look at it. You should definitely think about if you've done anything to your home. There's some requirements in the policy in order to unlock some of that extra coverage. That if you do, a lot of policies say if you do more than $5,000 worth of improvements, that you have to notify the insurance company. Otherwise, you might not be covered for those improvements in your extended replacement cost.
Wow.
So, and then you talk about what's an improvement. So if I'm ripping out countertop in my kitchen and putting a new countertop, is that maintenance or is it an improvement? So you get into those kinds of issues. But you want to think, did I invest any money in my home over the last year that might make it more expensive to rebuild? So you want to look at that. You want to look at, what's the price of things? You and I both know that the price of everything is very expensive right now. So, I mean, it's my mantra that you can't buy enough insurance to fully protect yourself. Buy as much as you can afford, as much as they'll sell you.
Yeah. No, and I think, insurance oftentimes gets a bad rap, but the reality is we can't live without it. Like, we need it, right? It's there to protect us.
Yeah, I'll take you one step further from a different angle that maybe most of your listeners or viewers probably wouldn't think about. But, we deal with everybody from retired people and limited incomes that have owned a house for 50 years to very wealthy people that have 2 or 3 homes, but, everybody in between. And a conversation I've been having lately with sort of the extreme, the people that have money and have wealth, is they're like, well, I think I'm just not going to buy insurance. It's so expensive. It's 3 times more than it was 2 years ago. And I'll just self-insure if something happens. So I've been having this really interesting conversation about risk transfer. You're putting this money here, not because it's expensive, but as a risk transfer tool, it still makes sense because if all of a sudden your $5 million house burns down and you got to rebuild it and you got to come out of pocket, that's not sitting in a bank account liquid. That's invested in other vehicles to make your money work for you, right? And what happens if you now have to draw $5 million out of those things? And maybe you had some things that if you draw out, you get some penalties by taking money out to do that. Or what happens if you end up with a taxable event because you took money out of something? What happens? How much per year are you making on that money by pulling it out? How much do you lose? So, and it's really a kind of a light bulb moment for some of these people. It doesn't matter if it costs me $50,000 or $100,000 a year for the insurance, because the cost to me, even though I have the money, the cost to me to use my money is not worth it.
Right.
So yeah, it's important to everybody in every scenario. It's important to everybody.
Right. Yeah, love that. And so let's talk a little bit about what have you seen with mortgage companies? Like you have, let's just do an example. The home burns down to the ground. There was a mortgage on it for $500,000. It was $1 million property. The carrier comes in and says, great, the value is $1 million. We're going to write you a check. Can you talk about what that looks like with the mortgage companies? And they're still making payments, right? While they're still living somewhere else.
Typically, the money for the building goes into an account at the mortgage company, like a trust account, and they pay out in draws as the contractor builds the property, assuming you're going to build the property. They can't call the loan talking about residential. They can't call the loan and make you pay it off. And what we have a lot of clients now that have really low mortgage rates, 3% or whatever, which you can't get right now. Right. So they really want to keep those loans intact. So they continue to make the monthly payment. There's some proposed legislation that would make it a little bit more fair to homeowners, because homeowners really should have the right to earn money on that money sitting there, and they don't right now. And there is some legislation. There's some good legislation that's being introduced, and there's some bad legislation, but there's a lot of legislation surrounding insurance right now that will impact all this stuff the next time we talk, when the next fire happens.
Right.
Some of it good, some of it bad. But one of the good things would be to give people the opportunity, because you're already paying your 3% on a pre-negotiated amount. So the bank's already making their money. So why is the bank sitting on this money and you're not able to access it or make use of it until you need it? And you don't want to pay off the loan because you don't want to go out and end up with an 8% or 7% loan. So, but typically, as it works right now, which could change soon, as it works right now, that money sits in a trust account and gets doled out as and when people are rebuilding. Did that answer your question?
Yeah. So a homeowner has $1 million home. They have a $500,000 loan. Carrier pays $1 million, and so then the homeowner now not required to pay off the loan, right? But still required to make the payments on it. And the insurance company is making the payments on the rental income.
Correct.
Where they are now.
Correct.
Now, if the homeowner decides to sell, they take the $1 million. They're only going to get $500,000 because they're going to pay off the loan. Then they can sell the lot. And have you seen people selling lots at this point? I heard some things in Altadena. Yeah. Okay.
Yeah, there have been some lot sales. I don't know how many. I'm not a realtor, but I have seen some of them. I know people who have sold. So I know there's some of that going on. And, people are leery to go in there because they don't want to look like they're trying to take advantage of people. But some people want to sell and they want to get out of there, and they just want to move on with their lives. On the loan, the mortgage thing, I've had people say, hey, Steve, I want to go and buy a different house, but I want to keep my loan. Can I transfer my loan on the property that burned and move it to the new property? And I'll tell you, I haven't seen that be successful anywhere. I think that the mortgage companies are smart and we're like, oh, no, if you're going to go get a new loan somewhere else or even with us, you're going to pay today's rates.
Right.
So I've had a lot of people ask me about that, and I've seen no evidence that any mortgage company's been willing to move their lien interest from property A to property B.
Steve, what about people that were like heavily leveraged, right? They had first mortgage and they had secondary refinance mortgage, and it's $1 million property and they're leveraged at $900,000. Like, are people walking away, and is the mortgage company stuck with this land because they don't want to pay anymore?
Yeah, I've seen that in the Palisades. Actually, there's some people that are pretty leveraged up there, and some of them will probably just walk, and then the mortgage company will take over that claim and recover whatever they can, and obviously they'll still have the land, and the land values they may teeter and totter for a while, and they might go down a little bit, but that area, the land, would be shocked if 10 years from now land isn't worth a lot more than it is now. So,
Right.
or a day before the fire.
Right.
Yeah.
Right. Absolutely. Now, excuse me. Steve, thank you for your time, man. Before we leave, is there anything that you want to say to the listeners? And maybe also in addition to that, where can they reach you if they have any questions regarding claims for either themselves or their family members or friends that they can share?
Yeah, well, I would say, take this seriously. It's a job to deal with the insurance company and get the money. And as you mentioned earlier, if you don't write something down in your inventory, they're not going to pay you for it. So take it seriously and consider getting professionals to come in and help you, whether it's us or somebody else. You can find competent people on the National Association of Public Insurance Adjusters website. I wouldn't use anybody that's not a member of that organization, but that's a good place to look for resources. And don't just take what the insurance company gives you, and don't just believe that if they tell you this is the way it works, that's the way it always works, because it's not the case. So be your own advocate or get an advocate, but don't just roll over and do what the insurance company says and believe that they're in charge, because it's your claim, it's your money, and you need to treat it as such.
Boom. Think overall the carriers are doing the best they possibly can, and the environment is so dynamic around these areas with the different heavy metals that are being found everywhere. So I think, as homeowners, us being more engaged than normal in a claims process is going to be crucial to what you're saying.
Yeah.
Really understand what is happening, because it's still very fluid out there right now. And just because it was done one way years ago doesn't mean that it's happening the same way now.
And even though we're about coming into 4 months into this,
Right.
January, February, March, April, May. Yeah, we're almost 4 months into this. We're still at the beginning. We're at the beginning of this. It's been 4 months, which seems like a long time. This is just the beginning.
Wow. I think one of the things that I'm concerned about is just like Lahaina. Lahaina hit the news, and we were all very concerned about what was going on there.
Yeah.
But time goes by and we forget, right?
It's true.
And here we are with Altadena, Pasadena, Palisades, Malibu. It's hit us so hard. We're here locals, but in a few months, something else is going to hit the news. And this is going to be kind of a faded memory, little by little.
Except for the people who are living it.
Except for the people that are living it. And so, and it's sad because the people that are living it are going to be shouting from the hilltop saying, we're still broken, right? We're still not made whole. And everyone else is going to be like making something else is on the news. And so their voices are not being heard as much as before. And I think what's a little concerning about that is right now, when it's fresh, this is the time that we should really be looking at our policies.
Yeah.
Having those discussions with our agent as to what am I covered for. We should be, doing a digital scan, like you had said, video record every single room, and be prepared.
Clear around your home, brush. A lot of insurance companies are giving discounts to people who are doing that.
Yeah.
Yeah, you're right. This is a great opportunity for people who were not affected by these wildfires, once again, to pay attention and realize that they're buying insurance for a real purpose.
Bingo. Boom. So I think for all of us listening, it's a continued wake-up call to make sure that we're doing all that we possibly can. And Steve, you dropped a lot of gold here, man. And, just like what's coming to me, and I wrote down, is I have done some remodel and some additional work to my property, and I have to communicate that to the carrier to make sure that I don't have limited coverage if I ever have a loss. And so, for those of you listening, I would forward this to friends and family and take notes, because there's a lot of information here that you can benefit from to really take inventory as to where you stand with your policy. So, Steve, thank you so very much. I think this can be a valuable podcast for listeners, and I appreciate your time.
I'll leave you with my email address in case anybody has any questions that didn't get answered. It's Steve at Greenspan, GREENSPAN-AI.com. If anybody's got questions that are raised as a result of listening to this, please feel free to reach out to me.
Boom. Thank you, Steve. Appreciate it, brother.
You're welcome. Thank you. Good seeing you again.
Likewise.
That's all for this episode of All Things Wildfire. If you like this episode, be sure to subscribe to our show and follow us on social media to stay up to date on all things wildfire. And as always, thanks for listening.